Okay, welcome everybody. Thanks for joining us. We're right on time, 9 o'clock Pacific time. So no matter where you are, thanks for being here. We're going to get started right on time. We're going to look at how smart traders are automatically selling options, collecting premium for income. We have a unique technology to demonstrate for you. Probably something you've never seen before. We can do this without babysitting our trades and screen watching. We're going to look at trading stock indexes in all directions. And then, of course, we're going to look at what people absolutely love are these one-touch trade alerts. So with that said, let's remember, we're speculating. We're trying to make money as prices move up and down. We want a profit, but of course, if there's opportunity for profit, there's also risk. So do take a moment and read the risk disclosure. It is important. Remember, all funds committed should be risk capital, and past performance is no guarantee of future results. So we'll look at algo-generated option spreads. These are pre-built spreads. Those one-touch alerts I mentioned will have automated risk and profit controls for bull, bear, and non-directional trading. We don't want to be this poor trader here struggling with orders and what to do. We'd like to be more like this robot with everything all taken care of. And maybe you've seen this type of pattern before. We call that the chop or the chop bucket. So what can we do in those conditions? How do you trade? What kind of strategies would you use? And maybe you're thinking, why not just buy and hold? Why don't I just buy and hold stocks? Well, here's a recent piece here from Jeremy Grantham. If you don't know, they manage 130 billion, something like that, from GMO. But this is their forecast for the next 7 years. They're looking at US large cap stocks down 8%, small cap down 8.5%, so on and so forth. And even looking at bonds down 3% or so. So that's their forecast for the next 7 years. And if they're right, you're going to need some alternative approaches to just buying and holding and being a passive investor, and even something alternative to perhaps, day trading, for example, which is sort of the latest rage. But before we jump in, a little bit about who we are. We are AltaVest. That's yours truly there down on the trading floor with some of our staff. We're an introducing brokerage firm since 1997. Of course, all of our staff have multiple decades of experience. You may have seen this before, some of our other presentations on the web. We used to do a lot of live in-person presentations. Of course, the pandemic put a stop to that for a while. And we do get referenced in media. Here's Market Watch referencing us here, AltaVest. AltaVest, this was just July 30, so we get that quite often, various publications. And of course, we're regulated with the NFA and CFTC. We're located in California. Those are the two regulatory agencies that oversee our industry. And along the way, we have traded millions and millions of options and futures contracts. So we're going to talk about that and the advantages to trading in futures options. So with all that experience behind us, we don't want you to try to figure this out by yourself. You don't want to end up like this poor guy here in the basement. So we're going to look at some trading solutions built with decades of experience. And just before we get started, a little bit about myself. I've been doing this about 30 years now. I have my BS in Business Administration from the University of Southern California. Started back in 1991. And I'm a co-founder with AltaVest, doing various presentations and introducing people to our strategies. Perhaps you've seen some of this, perhaps not, but either way, you're in the right spot. So how did I get started? Some people will ask, and so kind of get ahead of that. This was back at USC. We had an investments course, and we were looking at options markets, forwards, futures. That's my textbook there. I found that a couple of years back, some of my notes and all that. So I enjoyed the class, obviously. We were looking at gold prices and futures, crude oil contracts doubling in value as the oil fields were burning. So that's the context or the background as to how I first was introduced to the markets. I began in the securities industry with my securities licenses, but then felt the calling, I guess you could say, with futures and options, and that's where I've been since. All right, so we're going to jump in here. Common barriers for trading, and we're going to show you how to approach this with a new solution. And with the introductions out of the way, I will go ahead and shut off the web that allows for a larger screen, so you can see more on the screen. Mark Cuban, everyone's a genius in a bull market. Well, he's not the first to say that. I mean, everyone pretty much has said that for years. But remember, it's not that easy, folks. I mean, the market goes straight up every day. Yeah, it might seem easy, but look at this here. Almost 2/3 of adults who have been investing for less than 3 years use social media to make their stock trading decisions. So I don't know about you, but that's probably not an investment strategy to rely on. It's called selling a narrative or a story. Here's the bull here telling the Wall Street guy to sell me a story, and he's reading from the stock market fairy tale book, like that cartoon. So here's a story, right? This I had to put this in here. This photograph here kind of cracks me up. They're having some sort of pool party talking about AMC stock going to the moon. I don't know, but that's not a very credible source for trading. If kind of fun to look at, but other than that, and this one gives me a chuckle here. I think a lot of people have felt this way, especially since the pandemic lows, with the market recovering so sharply. Makes us all feel like we're a genius. But look at the harsh reality, folks. There's actually a less than 1% success rate when we're talking about day trading. Here's a Journal of Financial Markets. Here's a study. Less than 1% of the day trader population is able to predictably and reliably earn positive abnormal returns net of fees. So there's something to keep in mind. Of course, there's always a few that can do it, but that's really the exception to the rule. And quite frankly, you probably don't want to end up like this guy with 50 monitors and being fully absorbed all day long, because you probably have a full-time job and a family and other things to do. So how do we beat the market, or can we beat the market? But remember, it does take precision if you're trading any asset class. Typically, if you're trading in the traditional manner, you're going to be buying something and hoping it moves up in price. So you need to pick the correct market. The direction, of course, the strategy, the entry timing, and then your exit. How do you manage that trade? How do you manage the risk and reward? Something that so many people often sort of consider as an afterthought. They worry so much about where to get in but not get out. And look at this here, Mark Skousen, famous economist. He says the monkeys are actually better traders. And what's he talking about? Look at this here. Monkeys outperform the stock indexes by 1.7% average per year. So that's just sort of a random monkey portfolio, as they call it. So here you go, people. Here's your best trader of all out there. If you can hire this chap, you're going to be in business. All right. And also, random darts are beating hedge fund stars. This is from a couple years back, and I think that's kind of a theme, recurring theme actually, with a lot of money managers. They're just not beating the broad markets and the indexes. It's not that easy to do. Part of the reason why it's difficult to do this, folks, and we all know it, but part of the reason why is it's really, we get in the way of ourselves, our emotions. We tend to try to convince the markets that we're actually correct and the markets are wrong. So that's an expensive proposition, according to Ed Sequoia. Great feature on him in the book Market Wizards, if you haven't read that. So you don't want to end up like this guy here on the tombstone. You don't want to be fighting and yelling at the market. There's a lot of noise, we understand, and that's why we're going to show you this technology to help basically do the heavy lifting for us. You've got the bulls and the bears and all the pundits chattering. That kind of puts us on this emotional cycle here of roller coaster emotions. You've got the optimism and euphoria as you're making money, and then fear and depression, and then the white flag as you capitulate and sell at the lows. And of course, that just repeats itself over and over. You want to try to avoid that roller coaster. That's one you don't want to ride. Motley Fool says there are 3 common biases when making investment decisions. Our worst financial enemy is ourselves. So confirmation, anchoring, and recency bias. I won't go into all that, but I think we can all relate to those biases. For example, here's a great cartoon to summarize it. This guy's wearing blinders on his eyes, and he says, my stocks are doing great. What else do I need to know? Of course, he's oblivious here to everything else around him. And then here's the third hurdle, and then we're going to jump into the demo. Algo trading. Remember, they're non-emotional, and they are dominating the landscape. Bloomberg says that robots are outwitting humans on investment picks, called revolutionary trading. So here's what it used to look like, folks. This is one of my old grainy videos I took on the trading floor. And now here's what it looks like. So this is what trading's all about now. Black boxes and automation, no emotion, built-in controls. So how can we trade options and use technology to help us along the way? That's what we're going to look at. We're going to automate our options trading. We're going to look at what smart traders are doing and look at this sort of a, I guess you call it a weird strategy, an indicator. It's kind of a an odd word to use, weird, but I think it's appropriate here because it is unusual. So we're going to look at strategies for up, down, and non-directional stock index futures. And we have a unique indicator as well. And then before we jump in, why are we looking at stock indexes rather than individual stocks? Well, remember, an index is always less volatile, and there's a proprietary strategy that's really not available with stock options. And then, of course, if you're looking at just one or two or three markets, as opposed to, I think there's over 6,000 something or 7,000 securities, I think it makes it a lot easier to digest. And here's an example of volatility. Here's the S&P 500, this relatively slow and steady gain, and then you overlay that with Tesla in the same period. And I can see here the picture speaks 1,000 words. So that's what we're talking about. That's why we like the index much more than trying to pick an individual asset. And before we jump in to the demo, let's talk about insurance companies, because we are talking about selling options and collecting premium. We all understand how that works with an insurance company. They collect our premiums, and that's how they get rich. But they're selling and managing time. They're managing risk. They're hedging themselves. They're consistent and they're patient with their business model. They're simply looking at math, probabilities, long-term odds, statistics, actuarial tables, you name it, expected returns, all of that type of math. And a casino does the same thing. Let's be honest here, folks. That's all the casino is for, just built on math. That's why they have all those huge properties. And a lot of times people come through the doors thinking they're going to beat the casino, and for a short period of time you can, but in a long enough timeline you can't. That's because the games are set up mathematically to take your money. So you bet $100 on that green, you spin it 38 times, you do that enough times, you're going to lose 526 on average per spin. So that's the house edge. So they want you to sit there and play for a long, long time. That's how they get their edge. And of course, they're going to pay winnings at times, but they don't care. They want you to keep coming back. So how can you be the house when trading options? Well, maybe a baseball analogy here, without getting too geeked out with a baseball analogy. It's fair to say we all understand that you're more likely to reach first base on a base hit than hit a grand slam. So that's what we're talking about here with short option strategies, collecting premiums, various conditions, non-directional, bullish, bearish. We're going to look at these higher probability outcomes with a credit spread. And if you know all about credit spreads, that's okay. We'll get through this quickly into the demo, but just want a little bit of background and context for maybe a few that aren't quite familiar. But these are insured positions, predetermined risk and reward. They may be non-directional, and there's a large margin of error. Don't worry if you don't understand this chart, but just note that here's the S&P 500 moving around. Here's the upper boundary of the trade and the lower boundary of the trade. So you see this very wide margin of error for the types of trades we're looking at. And just a couple of Greeks we're going to look at. If you know this, that's great. Otherwise, it's going to go quickly, and it's very simple, folks. We're not going to dive super deep into multiple derivatives and second and third order Greeks, and we don't need to. Delta, it's the approximate probability of expiring in the money. That's really what it means. And here's an example. If the delta is 0.25 of an option, that means there's a 25% chance it expires in the money. But conversely, that's a 75% chance that expires worthless. And so that's how we're going to look at these options trading, these option trades in just a second. Remember, delta is always moving with price and time, so it's not static. And it is not the probability of a winning trade. So let's remember that, and we'll talk about that in a second. And then theta, it's just simply time decay. Remember, options have limited life. So theta is a negative number. It equals 1 day of time decay. For example, if an option's at 10 points and theta is negative 0.05, the next day the premium is 9.95. Then after that, 9.90. And day after day, it's just going to lose time value. Just that simple, all things remaining equal. And this is what it looks like on a graph. As you approach time zero, the percent of the premium remaining drops and drops and drops. So here's what selling a call spread might look like. You have this out of the money call spread, and let me explain that real quickly. You sell a 45.70 call, and that's the, I'm sorry, the 45.50 call, I wrote that wrong, but that's the red line. You sell that, you receive 4.5 points for selling it, and at the same time, you buy a 45.70 call, and you pay 2.25. The net result of that trade is you collect $112.50 minus your commissions. So that's basically collecting premium by selling an out-of-the-money call spread with, of course, limited risk and predetermined reward in advance. And the same thing with a put spread. You can sell an out-of-the-money put spread. You sell the 36.60 put, you collect 3 points, that goes into your pocket. But then you buy a 36.40 put, the blue line. You pay out a point, so the net result is 2 points that you collect, or $100. So very simple. Remember, these are not naked options. These are insured or hedged positions. Your maximum risk is always capped, and these are what's known as a covered option spread. So no naked options. And here's a great example as to why. Do not sell naked options because you'll end up on margin call and they have unlimited risk. And it's just that simple, folks. If you're doing it, I would stop doing it. And if people tell you they're making a bunch of money selling naked options, they probably are until they aren't. And then they're going to give it all back and then some. It's always going to blow up, always. Now, here's something called an iron condor. It's simply the combination of the put and call spread we just looked at. You sell a call spread out of the money and a put spread out of the money, and you collect the premium from both sides, and you look for the underlying market to stay in that wide range. But here is the weird high probability strategy we're talking about. It's called a dragonfly. It's for income generation, just like a condor. It's a variation on a condor. It's a proprietary strategy that we developed. And here's what it looks like. We'll go through this real quickly. The structure is always the same for a dragonfly on the calls and the puts. And you would start by selling 4 calls. You buy three of these further out of the money calls, and then 1 closer to the money call. And then the same thing on the puts, selling 4, buy 3, and then buy 1. And the key here is you'll notice this 40-60 call that you sell, you're selling 4 of them, but then you buy a 40-10 call, and that is 50 points closer to the money. So that has a much, it changes the dynamic of the trade tremendously, because remember, 50 points closer to the money means you're going to have a higher delta, and that means it's going to gain in value more quickly, and at the same time hold its value better, and it won't, theta decay won't impact it as much, and you own this one. And the same with the put. So it changes the risk reward dynamic compared to a Condor. And we're going to show you that some demos here. And there's another secret variation. We'll go through this one quickly, but you can use directional strategies too. By simply, I went too fast here, but by simply using half a Condor, so you or Dragonfly, so you could just sell the call side of a Dragonfly or just the put side of a Dragonfly. And I'll show you that in just a minute. But remember, we want to be boring as credit spread traders. That's the whole idea. That's our goal, is to be boring, watch time pass, and then manage the trade. So you're just selling these out of the money spreads, and you want time to tick away, and then you want to manage that trade. But how do you do that? You know, which market are we trading? When do you apply the strategies? At what price? And you know, how do you manage the risk and reward? There's a lot to figure out. So the answer here, folks, it's called Theta Trader. Those are some of our floor traders from a few years back, great group of guys. But these are pre-built option spreads. Our proprietary algo will create what we call theta trades. It's advanced strategy automation, bull, bear, and flat markets. And then we use automation for the risk and profit, something called the RTI. Simple, effective option spreads and management. All right, so now let's jump into the demo, folks. Okay, you're now looking at the dashboard for Theta Trader. And I'll walk you through this here. Actually very user-friendly, intuitive, simple, and effective. And I'm going to show you, you've got this section up here called Theta Trades. These are your open, short, and long positions here. You can see at a glance, of course, your account info. This is all being pulled from your AltaVest trading account. So everything is connected with your AltaVest brokerage account, and then current quotes here on the markets that we like to focus on. And what I'll do here is we'll focus essentially on these theta trades. You'll notice there are bullish strategies, all pre-populated and pre-built, and bearish and non-directional. And we're looking at the E-mini S&P 500, NASDAQ 100, and the Russell 2000. So those are the markets that we're focused on, and we're going to dig a little deeper in just a minute as to why. But since we looked at condors and dragonflies, let's start there. We'll look at a condor. So here we go. These are all pre-built by the algorithm. It's already selected for us, anywhere from 16 to 59 days till expiration. And you'll see the strike prices are already selected for us. And you'll notice here, this is your potential profit at expiration, and then your targeted annualized return at expiration. I'll make a note here that it's not realistic to expect to make 182% a year. That's not the idea behind this number here, folks. This is just telling you that annualizing this trade every 16 days, if you were to turn it over for a whole year every 16 days and you made the maximum potential profit on it, then that's how that ends up at 182%. But really, the idea is that this number here is meant to compare to other condors. So use the TAR to compare one trade to another. And of course, anything with fewer days till expiration is going to have a higher TAR. So anyway, let's look at this September into month. So we're drilling down into this trade, looking at the trade details. First thing I like to do is look at a graph. So here's where we are right now on the S&P. We're selling this call spread and put spread. That's what it looks like. So this is that wide margin of error that we talked about. Let's go back here and we'll look a little closer. Maybe you can see a little better. Hopefully that's better for everyone. Now, we're going to go through some of this, but not every single detail. But you'll notice 59 days till expiration, settlement value, and the cash required here. This is how much money is needed to place this Condor. And essentially what they do is they look at the maximum risk on the trade. If the world were to end and the market went to zero, your risk is covered. So that's the cash required, your profit potential at expiration, targeted return on cash, and then that TAR, we talked about that. So we're looking at selling this put here, the 3,800 and the 4680 calls. Now let me point out something here. Why would you sell this 3,800 put? Why that particular put and call, for example? Well, the algorithm is determined that that's the best balance for risk and reward. And look at the delta, 9.76. So you have over a 90% probability that this put will expire out of the money. And then the same with the call, 6.75. So you have over 93% probability that the calls that you're selling will expire out of the money. And it always pre-populates to sell when you're selling a Condor. And then you can change the quantity to anything you'd like. And it changes, of course, notice how the numbers change with the quantity changing. So you want to do 5 Condors, you're talking around 4,500. Let's just say $5,000 to round up is the cash required. And we'll leave the value here. You could adjust it, but we'll just leave it at a price of 230. And we'll go ahead and use that button to place the trade, and that's it. Your order would now be placed with us, and we, of course, Theta Trader will let you know when your order's filled. Now let's go back, and I'm going to show you a really terrific feature. And we're going to jump into the Dragonfly. But under the trading window here, there's a simulator, and I've loaded some trades already for the sake of time. Let me squeeze this down here. Okay, so here's a June into month iron condor. And we're going to go kind of like a time machine. We're going to use these buttons. We can go day by day, and I'll point out what's happening here. You see on May 1st, this is when the trade was placed, and you'll notice this green RTI. I'll explain that in just a minute, but green means good, like a stoplight, you know, go, do nothing. And you can see the days till expiration ticking away. And you can see the P&L of the trade turning green and positive. So again, we're selling time. Let's go ahead and play this through here. And look at here, it turns yellow and then orange. That means elevated risk, but still do nothing. The P&L went from positive green to negative. It's now a losing trade at this point. And you can see why, because it just rallied very strongly and started getting close to this upper boundary of the call spread that you sold. And what that effectively means is you collected a certain amount of money for selling this call spread. And if you were to close out that trade, you'd have to buy it back for more than what you sold it for. So you'd have to pay more money to buy it back. That's how that works. Now, let's keep going. Oh, now we're back positive. And then it turns blue. So with 7 days till expiration, it turns blue, and that's a signal that says get out and take your profits. So this trade worked out, it was profitable. But I want to point out something. If you didn't have the RTI and you were trying to manage this on your own, in this area here, when the risk started to elevate a little bit and you had a winning trade turn into a losing trade, what would you have done? How would you have managed that with a process, with something consistent? It'd be very difficult to do. Very difficult to keep your emotions in check. That's why we love this automation. So remember, this turned out to be a profitable trade with 7 days till expiration. Now I want to take you and look at the Dragonfly from the same day. So this was the same day, and if instead of the Condor, you placed the equivalent Dragonfly, the end of month Dragonfly, let's look at how this would have worked out. Look at this. It turned profitable with 34 days till expiration. So over a month remaining in the trade, and you could have taken your money off the table and walked away. And remember here with the Condor, you not only had to kind of ride out this small storm, but you had to sit in that trade and you had to wait till June 24 to get out. But with the Dragonfly, you were out of that trade on May 28th. So almost a month earlier. That's why we love these Dragonflies, completely different risk reward parameters. Let's look at another. Here is a March Condor from January 2. So far so good, nothing to do. Even though there's a negative P&L, it doesn't matter. The RTI is still green. Yeah, there you go. You can see that now. Turns yellow, slightly elevated risk, but still do nothing. Another yellow, but do nothing. And it goes back to orange, and then it turns red. Too much risk, get out of the trade. That's a loser. So on February 28, you would basically take your loss. And I want to point out one thing too. Just like back here, where the trade turned blue for a profit, and just like here where it turns red for a loss, you can automate this. So Theta Trader will monitor and track your position, and then if it turns blue or red, it will automatically place the order for you. You do not have to babysit this and screen watch. So we love that. Now, let's look at, you just see here, this is a losing Condor trade. And remember, this is the trade placed on January 2, the Iron Condor for the March S&P. So I've loaded the Dragonfly. So instead of a Condor, what if you did a Dragonfly? A little bit of elevated risk, yellow, turning a little negative here, the P&L. And look at this, it turns blue. It gave you an opportunity to take profit on February 21st. And on February 21st, the Condor, the equivalent Condor, wasn't even a profitable trade yet. You can see it was negative 350. So you can see the completely different dynamic between the Condor and the Dragonfly in some market conditions. So that's why we love the Dragonfly. And instead of going day by day, you can also just go right to the end. So let me do that here, save some time. You can see this trade ended up losing money with 2 days till expiration, this Condor. That's the April end of month. So here's the April end of month Dragonfly. We'll go right to the end. This turned profitable March 24th. So barely 2 or 3 weeks into the trade. It gave you an opportunity to take profit, and compare that to the Condor, it ended up being a losing trade. So that's a good example of why we absolutely love the Dragonfly. And let me show you, let me go back here and I'll show you how to make this happen. Under your settings, you simply activate the risk manager, check that box, activate the profit directive, you check that box, and then save those settings, and that will automate that RTI for you. And it's just that easy. That's all there is to it. So once the trade is placed, you don't have to monitor it. Theta Trader will do that work for you. And I also want to point out there is an educational video section here. If you want a review on options trading, there's videos here for Theta Trader tutorial if you want a little extra help with it, but you see how easy it is. It's very intuitive and user-friendly, so you may not even need that. I want to point out too, we have daily research. So you'll notice some technical analysis here and a market outlook. And there's a seasonal chart there. In fact, I'm going to show you that seasonal chart in just a second. And then daily trading summary. I write this here and we'll provide you an outlook for looking ahead, economic calendar, and then what happened in Asia, Europe, and the US. So people like looking at that at a glance to give them context. And now here is going back to the dashboard. I'll point out a couple other things and I'll move forward and we'll get to the trade alerts in just a second. But remember, we talked about briefly looking at a bullish strategy. Well, you can do half of a dragonfly. And what does that look like? Half of a dragonfly. So you just do the put side here. If you're bullish, so you're looking for the market to essentially do anything but crash. That's essentially what that means. So that's a strategy. There's something, of course, you could do with the opposite with the calls if you're bearish. So you don't have to do a full dragonfly. You can skew your position with a bias if you want, a directional bias. And of course, you can also buy condors. You know, that's something too we do on occasion. If you expect a large move, a very large move, one direction or the other, instead of selling this spread and this spread, you actually can buy this spread and this spread, but of course you're paying money for that, so it's a lower probability outcome. So that's why you don't want to rely on that type of trading. You don't want to rely on just buying options. It's just not going to work in the long run. And then I'll point out here something called a bull hedge or bear hedge. For example, let me give you an idea here. September end of month, we call this a bear hedge. And you're simply selling an out of the money call spread. You collect the money and you use that money to finance the purchase of an out of the money put spread. So the market starts to really drop quickly enough, then of course this spread will make a lot of money. And it would lose money if essentially, you know, you get a big run higher and you have to cover this call spread at a loss. But you can usually place this type of spread for even money or even at a credit. I did want to mention that. And now let's look at your open positions. How do you look at things? Well, first of all, you can see on the dashboard, you can see all the open short positions right at a glance. These are open bought positions. And you can go to your positions here and look at them all on one page. So it gives you a summary, 9 short, 2 long positions. You can see the RTI giving you just sort of an at a glance, nothing to do at all. You'll notice this one is orange, and which is normal because look, it's a long position. We bought 2 butterfly call spreads, and that's probably going to end up losing money, but it was a small purchase, and remember, that's not a high probability outcome. And if you wanted to look at, for example, this particular trade, it's on your open positions. You highlight it, you click on it, then you'll get to see backwards in time. You placed it on July 14, it had 66 days till expiration, and it's just doing fine. Time is working, time decay, theta decay is working just fine. Trade is green, profitable, P&L. It's probably getting mature enough very soon for Theta Trader to exit that for you. And then if you want to look at your history of closed positions, you would go here. And this is just a demo account. So essentially what you saw me do when I placed an order, these are all the trades when I do demos every week. So there's 16 winning trades here out of 16 trades, 13 short positions, 3 long positions. I wouldn't really make that a performance claim. I'm just pointing out that this is a demo account that we use, and at the moment, it's everything's looking really great, obviously. So, which can be the case for a long period of time when you're selling options that are deep out of the money. That's the whole idea. These are higher probability outcomes. And if you wanted to look at the history of any particular trade, I just clicked on this dragonfly here. Then we'll scroll down and you can see the trade. And you can see the blue RTI, and that's when Theta Trader automatically closed out that position for me in this demo account with 43 days remaining. Okay, so hopefully that all starts to kind of sink in and make some sense here. We went over some of this already, and I showed you how to make sure you can automate that. And we'll go back to the dashboard, and I won't get any deeper into this because that's really covering the basics. Once again, you could look at the NASDAQ 100 or the Russell. Maybe you're looking at the NASDAQ, and I don't know, maybe you're really bullish. These are the strategies you could put on. You could put on a bullish bull hedge here for August into month. This is what it would look like. So in any case, that is the dashboard for Theta Trader. And let me switch gears, if you don't mind. I'm going to jump into, I think, the best feature of all. And I do see questions coming in, and I'll try to get to those as best I can. And someone's asking about, sorry if some of you are having audio trouble. I know the audio is working. If you're having trouble, it might be on your end. And someone's asking about selling the call and put spread together. Yeah, you sell these things simultaneously. You never leg in. And we always close out the position before expiration. So you're always going to be out if you're selling a Condor or a Dragonfly, for example. Theta Trader will close that position for a win or a loss before expiration. There's never any reason to hold these trades through expiration. All right, well, let me go ahead and let's make sure you're viewing the same screen that I want you to. Yep. All right. So who remembers that scene from I Love Lucy? Couldn't keep up, too much to take in. So hopefully that wasn't like drinking from a fire hose with all that information. I think it was very simple, actually. I know I've been doing it a while, but I still think it's a very simple approach. So let me show you how we can do this, make it even easier. So these are trade alerts, and these are one-touch responsive alerts. And what am I talking about? You receive an alert. For example, you see this image here. You'll have that green accept button or red reject. And if you want to accept that alert, you don't have to log into another platform and try to copy someone's email or someone's text message. People do that all the time, and they always make mistakes copying an alert, and it's just a pain. And it's the 21st century, folks. That's kind of ridiculous. So these alerts are live, meaning they're integrated with your AltaVest account. So if you touch accept, your order is placed automatically via our technology, and everything then flows through Theta Trader like I showed you. So here's an example. You'll receive a text or email, and you just simply click the link. You touch the link, and you'll see what happens. You'll see the alert and the graph for the alert. That's a Dragonfly. And I want to point out that tells you the net premium you're collecting, how much cash is required, telling you the quantity, and it's already pre-sized for your account. So the quantity and everything is already set up for you. And then that's it. And look at that one more time. Of course, if you didn't want to accept the alert, you just touch reject. So there you have it, folks. That's Theta Trader and the alert. Fantastic technology and new strategies available for options trading. So how do you get involved? We have something called the Theta Trader membership. So of course you have access to our Theta Trader software. We just saw the demo. Those proprietary algos create the option spreads for you. Makes very simple, effective trade selection. You have the RTI, that color-coded trade management, to automatically manage your position for risk and reward. That's sort of like putting your trading on autopilot. Remember, we talked about some of those hurdles about emotions getting in our way. This is how you solve that problem. Or you could try to figure your brokerage statement out and make sense of all your trades. You don't want to do that. That's a mess. So remember, we talked about how to automate that. You just check that box, activate your risk manager and your profit directive. It's just that easy. Then we saw the trade simulator. You could spend a lot of time in that time machine, as we might call it, going backwards and looking at different simulations, different strategies at different periods of time. Just use those buttons down below. People enjoy using that a lot. So you have the Theta trades, the RTI, and the trade simulator. That software value over $3,588 a year. Then remember we talked about the trade alerts. Those are integrated with your account. You simply touch accept or reject. You've never used alerts like that. I know you haven't. You're getting newsletters, you're getting subscriptions to services. I get it. We've all done that. But that's all antiquated stuff. Everything should be integrated, an integrated technology solution. And then, of course, once you accept a trade, the RTI can then take it from there and manage the risk and profit for you. That software valued over $4,400 per year. So you have the Theta Trader and the alerts valued over $8,000. And then people will always ask, but is there any help? Yes, we have a private coach available for you, and that would mean someone who can work with you one-on-one. A Series 3, that means licensed to trade futures and options. Experienced trader. They'll share their screen and do 1-hour training with you. So you'll have a co-pilot. You can develop a relationship with that person, discuss your trading strategies and history. $7,500 value at least. People are spending $25,000 for education. I hear about it all the time. That's not hyperbole, and that's great. But what we're saying is with Theta Trader, we provide what you need with your membership. So remember, here is to summarize. You have Theta Trader, the alerts, and the private coach valued at over $15,000. And I won't drag it on here, but you know how they always have that. But wait, there's more kind of thing. Remember, we talked about our proprietary research. I don't want to dismiss this because it is very valuable. And it's valued almost $3,000 a year. People rely on this when they place their trades. So that's available, of course, in the online tutorials I told you about. So you add that all up, the Theta Trader software, the alerts, the coach, the research, over $18,500 value. And you ask yourself, could this be the solution that works for you? We think it could be that one thing. Yes, I think it can definitely save you many hours of time. You can cancel other subscriptions and save money, kind of lower that stress and aggravation, get your emotions out of trading. We think it would all be worth it. People tell us that at least. And this is no joke either. I know people are paying tens of thousands for options trading software and trade alerts and systems and you name it. And I've even spent lots of money over the years as well. So I'm right with you. So here is our membership price, $29.97. And we used to do a lot of in-person events and have people lined up at the back to get signed up. But of course, times have changed. So we have brought down the price because it is a live webinar. Want to make sure you can take advantage of this. So we can do even better, folks. It's an 80% discount. Lifetime membership. Remember, this is not a yearly thing. Only one payment, $597. And there is the link, cf.altivest.com/TT. That's how you would get started at the order form. There's our phone number if you want to call. If we don't pick up right away, it's because we're on the phone, but do leave a message. And 30-day guarantee. So really, there's no risk. If you want to sign up and get a membership, and then maybe something changes in the next 30 days, you have to cancel your membership. There's no risk for that $597 fee. We'll just gladly refund it. We're not holding anyone hostage here. It's not how we operate. Been doing this since 1991. So anyway, now a few FAQs. Tax efficiency, yes. Here's a big thing, folks. This is a big deal. If you're trading individual stocks, you're not tax efficient. Here's your example. You get a 12.6% return in this example if you're trading individual stocks. But if you're trading futures and futures options, your return is actually 14.64% in this example, tax savings of over $2,000, just because you're trading with a tax efficient market in a space. So IRS treats your gains differently when you're trading futures compared to stocks. Much more favorable. And of course, there's no more itemizing. So keep that in mind. No more wash sales and all that nonsense when you're trading with futures. You just get one number. Here's your profit or loss at the end of the year. And you plug that into your taxes, and that's all there is to it. Now, why the E-minis? They're liquid, they're efficient, they're cost effective. How can mini be huge? Well, it's 2.5 times larger. What am I talking about? The E-mini S&P 500, it outtrades all ETFs around the world by over 2.5 times. So here's what that looks like here. 6,600 ETFs around the world. The E-mini S&P is still 2.5 times larger than all of them. And even the SPY, everyone thinks, oh, we're trading the SPY this, the SPY that. That's the place to be. All right, that's fine. What about the E-mini S&P 500? Almost 10 times greater in average daily dollar volume. So this is where you want to be trading. Large volume, liquidity. Here's June, average daily volume, over 1.4 million. So that means you get superior execution. So that's a cost savings. And what does that mean? A tight bid-offer spread. That's what it means. And we can get superior execution with our dragonflies with Theta Trader because everything's being done in our futures option space. When the order's placed, it's placed as one object at one price. If you try to do this trading stocks, and I've seen people try to do it, and I've looked at it, you can't do it the same way. You have to first build your own Condor, get that order filled, and then try to fill in the rest of the dragonfly by buying trading another spread, and then managing it as two separate spreads at two separate prices. So you're legging it. It's just horrible. You can't do it that way. It's just the infrastructure in stock options is completely different compared to futures options. And also that's the largest market share, so you have densely packed strike prices. 100 annual expirations ensure granularity and coverage. And what does that mean? Here's what it looks like. You have more strike prices to choose from. So the algorithm, when it's looking for trades to build, the strike prices are available. And that way you can keep your positions, what they call laddered, so that you don't have a concentration of risk at any one expiration or strike price. So remember, we're looking at just tracking really 2 or 3 different stock indexes, not thousands of securities. We talked about efficient margin versus stocks. Well, I think I referenced it, but really, without going into it, margin use is much more efficient with futures and futures options. There's a clear cost structure. And what am I talking about? Okay, E-minis are not securities. So we don't have any of this nonsense, and I'm going to tell you about it in just a second. But everything trades here, we're talking about at the CME Group, largest futures exchange in the world, on their electronic platform called Globex. That means when you place an order, no matter how large or small, every order is treated the same. Every order is filled within the same mechanism, the same Globex exchange platform. So every order gets treated equally. There's no payment for order flow. So that's what you see in the stock market with stuff like Robinhood. Here, it's not commission free, folks. They say it is, but it's not. In fact, people are kind of clamping down. When I say people, the SEC and FINRA and whatnot. They're saying here that you get inferior trade prices, but they say it's commission free. So just remember, you don't want to save a penny to lose a nickel. And here's another comment from David Einhorn, famous hedge fund manager, actually outperforms quite well. Payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission. Nothing of value is truly ever free. Great piece in Barron's. So that leads us to the question people always ask, what are the commission rates? That's a fair question. It's 5.25. That's round turn, and that's all in. And I want to point out that if you go, here's a big box brokerage firm. I went to their website. They have a listing here at 2.25, but it's per side. So when you add all the other clearing and exchange fees on top of that, it's going to be more than what we charge. So our rates are very competitive. And I want to point out too that all of the numbers in Theta Trader that you saw are net of all trading costs. Okay, so I should have pointed that out, but it's highlighted here. So everything is net of all cost. And people ask about performance, but the answer, of course, everyone uses Theta Trader differently, so everyone has different performance. What size of account should I use? Well, our answer is if you want to have multiple option spreads, and you should have your option spreads diversified. We think 25,000 is really the bare minimum. 50,000 is probably better. And I think 100,000 is even best. And if you have a $100,000 account, we'll gladly rebate that membership fee. People actually take take this offer a lot. They really appreciate this actually. So that's something we can do, no questions asked. Yes, we can trade with an IRA, individual joint, corporate LLC, trust, you name it. And let's see here. In fact, with the IRA, let me get to that in just a second. There are benefits with these self-directed IRAs with alternative assets to help diversify a portfolio by adding investments with a low correlation to stocks and bonds. May help retirement investors control volatility and limit downside risk. So again, why alternatives? May improve diversification and lower portfolio risk. We're going to get wrap it up here with a few more questions, but inflation, some of us have been paying attention and noticing commodity prices soaring, consumer prices surging, used car prices skyrocketing, breaking a 10-year record. Look at the price here of used car prices. It's crazy, that big spike. Even gasoline. So meanwhile, here's the Fed. You see any inflation? Nope, I don't. I'm not seeing it either. So they're the three blind mice. So how do you protect yourself from inflation? I guess the point I'm making is you need to have some alternative approaches, and that's why we love the strategies within Theta Trader. And what about a stock market rally? Was it going to go on forever? Here's a great little pie chart. Top 20 stocks in the S&P 500. So you have just really a small number out of that 500 make up most of the, well, not quite half of the return of the S&P 500. And this is an interesting chart. I'll explain it real quickly. Here's the S&P 500, obviously way up here. And what's this here? This is the put call ratio. So basically what this says is nobody is buying puts, meaning nobody has any fear right now. Everyone thinks the market's going to just keep going up forever. So something to keep in mind, folks. The top 5 S&P 500 stocks make up over 22% of the index right here. So there's just not a whole lot of breadth in the market. It hasn't really mattered of late. I mean, we're still near record highs, but probably makes sense to have some alternatives in mind. And here's a bearish seasonal. This is more imminent, I think. This blue line here is a post-election year for the S&P 500. So here we are right now, very beginning of August. And from a seasonal perspective, you're looking for a bit of a drawdown here and then a rally kind of back to where we started from. So kind of interesting. We'll see if that plays out. But we like the Theta Trader platform a lot because it's not correlated to anything that's happening in other traditional asset classes. That's what you call absolute return. So do you want your portfolio like this, or would you like a slice of it in those alternatives such as what Theta Trader can provide? So with that Theta Trader membership, remember you get the pre-selected spreads, the automated trade management with the RTI, you get those trade alerts, and the personal coaching. That's what ties it all together. So let's not do this, folks. You don't want to be like this guy here. When it comes to investing, I always trust my gut. That's not a smart thing. You need a process, you need some technology, you need some experience. So that's what we like. We like the process we've got here with Theta Trader, using the technology, remove those emotions. And there you have it, folks. There is our offer, $597, and there's our contact info. You can always call us if you have any questions, but mostly people just go right to the page, sign up, and we'll get you onboarded and on your way. So cf.altivest.com/TT. And I see a bunch of other questions. I think I've answered some, but let me get through these here. Let me jump in here real quickly. And yeah, once again, folks, feel free to call, but if I don't pick up, you know why. I'm on the phone here with you. All right. Yeah, we get this question. Theta Trader is the technology that Altivest developed. So Altivest is the brokerage firm. If you want to use Theta Trader and the trade alerts, then you would open an account with Altivest. That's correct. And no, it really wouldn't work with an account smaller than 25,000. And the trade alerts and the Theta trades themselves include all commission cost. So it's already factored in to the numbers and the calculations. So yeah, everything is inclusive or net of commissions. So good question. And let's take a look here. If you're Canadian or from the EU, we typically, unfortunately, can't work with you unless you have a legal U.S. residence. So if you do have a legal U.S. residence, let us know. But just regulations and other things that are out of our control, we would love to work with you. A lot of people ask from Canada in particular. Yep, and we're trading futures options, not stock options. And it just depends on where you're located. If you're out of the U.S., so ask us. I mean, if you're in Australia or the U.K., we can work with you. Perhaps some other countries too. But do ask us. And these are not. Someone's asking about the different types of charts and so forth. We're not doing high velocity day trading, so we're just using essentially daily charts for this options trading. Yeah, you can absolutely try Theta Trader. Jump in with 25,000 and add more to it, and we'll certainly work with you on the rebate for your membership fee. That's fine. And yeah, not SPX options. We're using futures options. There are many advantages we talked about for futures options. And you want to use the trade simulator, that's fine. You can go backwards in time. People are asking how do you look at what some of these trades may have done. The best way to do it is use the trade simulator to go backwards in time. And how would you decide which Theta trades to make? Well, partly that means, partly that's a function of what you already have in the account. So if you have some dragonflies with some current strike prices at current expirations, the next trade you place, probably you don't want to repeat the same strikes or the same expiration or anything close to it. So you'd want to make sure your strike prices are different from your existing strike prices, and same with the expiration, and just kind of keep moving forward like that. As the trades come off, you just add new ones. And this is not PC based or anything like that. I mean, it's not an app, so it's just a SaaS, internet. So if you have access to the internet, you can use Theta Trader and the alerts. Well, the alerts, of course, they come in your cell phone, so all we need is your cell number. Yes, and we work with IRA accounts. Absolutely, people transfer accounts, and that's something we do every week. So self-directed IRAs are kind of a specialty. Let us know, give us a call, and we can walk you through that. But yes, you can transfer your IRA or any other account for that matter. And how many trade alerts? Yeah, I think this, depending on the environment, but it can be 2 or 3 a week or maybe once a week. So it just depends on the environment. But if you have an account, you might have 5 or 6 or 7 different trades. And as one of those comes off and matures, and the next one comes off and matures, now you'll have availability for 2 new trades. So you might get an alert with 2 new trades coming on board, and you could accept those and kind of fill in the gap and just kind of keep the portfolio and the allocation going and keep it rolling. Yeah, good questions. I see some of the questions I've responded to already. And in terms of, yeah, we have a 30-day guarantee on that rebate. I mean, and let's face it, folks, we're not going to hold you hostage. If you somehow sign up and decide whatever, it's not for you, it's 31 days. We don't want you unhappy. That's not our business. So, but let us know what you have in mind. And yeah, it's not a software service here that only works with a landline or a PC or cell phone. Someone's asking that. No, it's just if you have an internet connection, you can use Theta Trader. And if you have a cell phone with a cell number, then you'll be able to receive those trade alerts. You can also receive the trade alerts via email as well. And let's see here. People asking about performance. Yeah, the best way to do that is just look at the trade simulator. But everyone uses Theta Trader differently, so there's no performance to speak of. And I'd say mostly people are accepting the theta trades and using them just as they are, but some people do modify the strikes. That's okay too. But for the most part, people just accept the theta trades the way the algo builds them, and that's the whole idea. Yeah, and I think we can work with accounts out of Mexico if they're of a business or corporate account. So let us know what you have in mind. Someone's asking about that. And we're looking at typically 25,000 as a minimum account size. Because remember, each dragonfly is about 5,000, and you're going to want, several dragonflies spread over at different expirations and different strike prices, and you're going to want to kind of keep those rolling. You don't want just to have, one dragonfly and have all your account in one particular trade. All right. The best thing to do is if you have any comments or questions or feedback, you can send us email there. You can call us. And otherwise, if you think you've kind of got it handled, you can certainly just go right to that link, fill out the order form, and get yourself started. And there's never ever been a time where we haven't honored any 30-day guarantee. So I wouldn't worry about that. We've been doing this a long time. That's not our business. To take a membership, and so don't worry about that. And if there's anything else here. All right, folks, thank you for joining me here. And yeah, we had a great crowd, a lot of good questions. I'm trying to think if there's anything I'm missing here. But I think I've covered a lot of the ground and all the commonly asked and frequently asked questions. And let me just one more thing here. Okay, well, that'll do it, folks. And we're going to wrap this up, and there's a recording available. And this price is good through Friday night, by the way. Yes, if you have a certain account balance in mind, let us know. But we do suggest 25,000. All right, we'll let you go. and have a great week, and keep in touch with us. And we'd love to hear from you. People love using Theta Trader, something completely different from what they're doing. There's no hype, there's no hysteria, there's no hyperbole. We're not gonna say anything about how you can crush it with this or that. I mean, all that stuff on the internet, just absurd and ridiculous nonsense. And those people aren't going to be around very long. That much is for sure. So you want you want to be like the tortoise and the hare, the slow and steady. You want to be like the tortoise who wins the race, and that's low velocity trading, high probability outcomes, methodical process and approach with discipline. Use technology to help you along the way. Use experienced people behind the scenes and to coach you along the way. So that's what Theta Trader is, and we'll have you up and running in no time if you get that membership signed up and get you onboarded, get you that account application and on the way. So let us know if there's any questions, comments. You know how to reach us, and thanks for joining us. All right, bye-bye.